Back in April 2022, I had just sold my car, put $5,500 into my tax-free savings account. And at that point, I thought the end year goal of $25,000 was within my reach. And, basically since April till December, that clearly was not going to be the case. Too much uncertainty in the world still. That stock market has just been really underperforming. And here you can see I'm down 12%. I'm like 21,600. So I'm well off the targeted goal. And again, that was based on, I think it was maybe 10% growth in the market by the end of the year, which it's not here. It's gone. Nowhere to be found. Yeah, we're going to end the year with some unrealized gains. But it hasn't all been that bad, I'd have to say. I'll do a full recap on the year later in this month, but as a dividend stock investor, I've still been receiving dividends, and I've been trying to grow those dividends every single week, so that should lead into the intro. Hey everybody, my name is Steve Coleman. I hope you and your investments are doing well. Every week I put $150 into my tax-free savings account to grow some dividends to use as passive income, really investment income, to, just live out my years and just really splurge and just enjoy life. But in this video, I want to look at some of the positions I'm holding, what I'm doing with them, and what I plan on potentially doing with them in the new year. So there are 3 off the bat that I've been talking about before, which I'm going to show you in my portfolio, what's going on with them. And the first one, Algonquin. You guys have heard about this one a lot. So this is a position I'm still buying into. Like for the year, they're down like almost 50%. But again, they are a great one to buy into right now. If you are planning on holding for the long term, if you're planning on turning this around, just holding it for a short term, clearly this is not the stock for you. It's going to take a while for this stock to get back up to the price it was, like $17. Right now it's currently like $9.15, which is why I'm buying in, especially since the dividend yield then is roughly 9.8%. So I'm buying in at a very, very high dividend yield, but I'm not selling. I'm going to hold on to it. And that is just my overall strategy. I'm going to buy and hold, collect those dividends, and then use those dividends to reinvest into other stocks. And one other stock would be Aecon, another one that has been steadily going down, but I am trying to buy more into this one. Actually, I'm done buying into this one for the year. I just finished a few purchases just this week, where I'm now up to 168 shares of the Aecon. It makes up 6.8% of my overall portfolio, but I am currently down 33%. And again, their dividend yield is 8.38%. In January, they do pay their dividend, and I expect that one to be in the $30 range, which is amazing. I remember when first starting out on this journey, and when I made $5 in a month, that was, a feat. That was amazing, and it felt great. Now getting $30 from just one position, again, another great feeling as you just keep consistently investing into the stock market. So the other stock that I plan on buying, I think 2 more of before the end of the year. So next week I plan on buying some more of Bell Canada. And their price is up and down, so they're for the year they're down 9%. It's another strong dividend paying stock with their yield currently 6.17%. So they make up 6.9% of my overall portfolio, and I'm just down negative 6% with them. So I'm not going to go into every single stock here, so we'll just kind of scroll down the list and see what I plan on doing with these in the future. So BEC, Brookfield Renewables, its dividend yield is around the 4% mark right now. It's one where I will put money into it as I need to, but I want to build out some of the other positions. I'm just going to hold on to this one. No plan on selling anyways. So, Bank of Nova Scotia. This is another one I'll be putting more money into in the new year. Financials, obviously, because I'm a dividend investing channel person, Financial Institutions of Canada, they are some of our top paying dividends companies. So of course those are my portfolio. And the only reason I have Bank of Nova Scotia is to balance out Royal Bank. Not trying to have one major position in one major category. So again, it's all about diversification at the same time. And Corus Entertainment, this is one that's dropped a lot. I was able to get my, dropped 56% in the year. So, wow. But I've been buying more into this one to kind of get down my average buying price. I started at $6 at the beginning of the year, and now I think I've got it down to 3.77. So that's great. We'll buy more into this one, again, as I need to. Try and keep everything very diversified, as evenly as possible, even though there are some sectors that I want to grow out more, like the renewables. Diversified Realty Corp. This is one that I had put a bit of money into throughout the years. This is a great monthly paying dividend stock if you really want to kind of keep that investment income see it on a regular basis. Diversified Realty Corp is a great company. Right now their dividend yield is 7%. Interject Renewable. So this is one that I plan on buying more of in the new year. So they're currently down 12% for the year, and I'm personally down 6% because again I've been trying to buy to average down my costs as I go along. But Manulife, another great Canadian institution that's always, I think they're on the Dividend Aristocrat list. Do your own research, look it up, not financial advice. Another one, again, I will buy into this one as I need to kind of diversify my accounts. And the same thing goes with Pizza Pizza. This is actually one of the stocks, actually RioCan, no, that's the next one. Pizza Pizza is one that I'm actually up. For the year, they're up like 15%. I'm up again, then 15%, which is amazing. This makes up 6.28% of my portfolio. They are a monthly paying dividends company of 5.8% currently is the dividend yield. So I will be buying more into Pizza Pizza because I haven't really been putting much money into it throughout the year because I've been focusing on some other stocks because that one was doing well. So I was like, okay, let's average down my cost. But it's going to come to the case where I'm going to have to put some more money into Pizza Pizza as well, just to kind of keep it growing. And again, diversification is key to my investing strategy. And RioCan, that's another one where I am actually up. We'll jump into that one. For the year, they are down -6%, but thankfully I am up 3.3%. So $46, I've got a gain there. Their yield is currently 4.93%. And again, this will be one I will probably put more money into it in the new year, of course, right? All these I'm going to be putting money into. I think that's kind of redundant of me to actually say. So Royal Bank of Canada, this is one that's done really well for me. It is currently down negative 3%, but I am up 15%. So if I even jump over to the 5-year view, I was able to buy this one as it was riding up from the pandemic, when everything dropped in March 2020 and everything was slowly ramping up. That is when I got into investing. That's when I was able to take advantage of a lot of low prices. Clearly not enough. I wish I would have started just a year earlier in my investing journey, but alas, here we are. Still doing pretty good. And the last one is my Vanguard ETF. It is the high dividend yield Canadian ETF, VDY. It is for the year down -2.6%. And this was one actually I bought at its high. So I am down 13%, which that kind of sucks because actually it's one of my biggest positions. So I'm down $733. But again, I'm not selling. I am just going to collect the dividends that this one pays out monthly. And because it's got a 4.38% dividend yield. Just collect those dividends monthly, paying in this instance, and reinvest that as I go along. Usually with this one, what I do is once I get what's the stock price? $41. Once I get $41 worth of dividends, I reinvest then and buy into this one to kind of snowball it and keep the party going. So there we go, -12%. What are we going to do? It's going to be a completely different story next year. That's why I invite you to follow along, subscribe, like the video, and let's see where this all goes. Like, you know, some of these I question my sanity, you know, buying more into, especially Algonquin, Aecon, when they're dropping. A lot of people are pulling out of those positions, but I think it's the right thing to do. I think this is a great opportunity to dollar cost average, and trust my instincts that the dollar cost averaging approach is a great way to go, and just keeping that diversification. And we're going to see how that all works out. And that's why, yeah, I do invite you to follow along and see, learn from my mistakes, and like celebrate my successes with me, please. I think that'd be awesome. So this is a great community we've built here, and I'm glad you're here. But we'll see you in the next video. Merry Christmas to all of you, and we will see you still this year. So I won't say Happy New Year's yet, but thank you so much for, you know, making it a great year. Thank you to everybody who has subscribed, and like, you're more than welcome to join the party. Woohoo! Anyways, yeah, keep it in the green. We'll see you in the next video, and take care, everybody. Bye.